Taiwan is absolutely flat right now, just about managing to hold in the green.
I do see a pathway to bringing inflation down, which of course is the imperative right now. Inflation is just too high.
On steel, stainless steel, pellets as well as iron ore with sub 58% Fe content, it's been reduced to zilch. That's zero.
Zomato, there have been 3 large exits in the last 1 month itself, and the latest one came on Friday, where the co-founder Mohit Gupta has announced his departure.
That's the first tick on the index, down about 60 odd points.
Emerging markets will be the place to find growth and a pickup in the global economy.
Government in its wisdom had put in these duties also to save the domestic industry.
Those are the 2 new listings today. The one that's expected to be cracker is Archean Chemicals.
Utilization as of now is around 55-60%.
Benchmark indices are down 0.8%. This is the 3rd consecutive day that the markets have declined for us.
The total cash on the books is close to 1,000 crore. This includes the investment in mutual funds plus the cash component, and estimated free cash is in the range of 500 crores.
Last week, they discontinued the entry-level plan in these 2 circles. The entry-level plan earlier was 99 rupees.
The markets are under a lot of pressure. The Nifty, which is declining 160 points. There is Bank Nifty, which is the one which is putting some pressure.
Well, that was the day so far. You're with us here on Closing Bell. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi.
I mean, things are down and out, isn't it? For the last 3 days now, the market has been looking weak. But actually, it's not just 3 days. You can go back the last 5, and the screen has been telling you that, it was getting a little tiring. Got very, very close, within 1% of all-time highs, hesitation, indecision, and finally some profit booking, some pullbacks is what we're seeing. So we're below Friday's low, last Friday's low. Friday, of course, in the last hour, we got that 100-point pullback. We're just starting today's last hour. Let's see if something dramatic happens. But for now, we're below Friday's low. I was saying this in the morning as well, that 20-day, not the 200-day, that's a 20-day moving average for the Nifty is 18,079, which is not very far from where we are right now. But I think that is an important level. Again, not the 200, but the 20. The Bank Nifty is above the swing low of 41,965. It's holding its head above water. I think on the downside, that 41,965 becomes a level to watch out for. The reason why you're seeing some strength is PSU banks is the only space which is, sectoral index, which is trading with some gains, is up about 1%. Broader markets are doing largely, better. Small cap index is even in the green. Mid caps are slightly down. Although market breadth on an overall basis is negative. And globally, things are seeing a little bit of reversal. So, that is very evident. On Friday, I put it as the reversal of the reversal, and I think that theme continues. Asian equity markets did not close at the day's low. Even Chinese markets, Hang Seng, etc., closed about 1% of the lows, but they all closed in the red. Europe is down, and I think US futures are trading slightly lower as well. Nigel, hi, afternoon.
Well, afternoon. You said it. Things looking a little bit weakish, but as you said as well, that in the final 30 minutes, the odds are normally that we see a bit of a recovery. And don't get fooled by the mid-cap index. That's appearing like a relative outperformer with only 0.2% lower. But if you look at the advanced decline ratio, that's telling you the better picture. You have close to 2 stocks that are declining for just 1 stock that's advancing. But, well, Reema, let's run our viewers through what we have lined up on the show.
It's a power-packed Monday. 5-star Business Finance and Archean Chemicals have listed on the bourses today, while Archean Chemicals listed at a premium of 10%. 5-star Business Finance had a muted debut, but since then, the stock has recovered to a 6% gain. All the details on these 2 listings on the show. IEX Search is in trade as its board gets set to meet later this week to consider share buyback. Details on this stock and the potential buyback on the show, and Multiplex stock gain on the back of big releases. Details on the weekend collections and more coming up on Closing Bell today. And in a boost for steel sector, the government has rolled back most of the export duties on steel and steel products. Key excerpts from our conversation with a whole host of steel companies coming up on the show. And finally, we'll be joined by our Alpha Manager for the day, Aman Chauhan of Abacus Asset Management, to discuss more on the markets. Okay, but before we get to all that, let's first up get you a CNBC-TV18 exclusive. We learned from sources that the centre could reassess the national monetization pipeline goals and receipts. Sapna's here with the details. Sapna?
That's right. What we're getting to pick up is the fact that some kind of rejig within the national monetization pipeline is very much likely. This pipeline is worth around 6 lakh odd crores. That has been the government's aim. It was launched way back in September 2021. But some of the excitement emanating from this pipeline and the monetization of assets, that seems to have kind of, withered away, so to speak. So we're given to understand that a rejig is on the cards, trying to make the pipeline and its goals more realistic. Probably within that, I think the government, rather the centre, will also look at it in terms of how much will be accruing to them, because once you have a monetization pipeline, it's a three-way sharing of resources between the state governments, the companies, of course, which are doing the monetization, and some bit of it comes to the centre. So all of that is going to be part of this realignment that we are talking about. Of course, in terms of the 6 lakh crore number, that looks a bit fancy and a bit difficult to meet. But at the moment, at least, the centre will be sticking to that. Also, in terms of the laggards, well, railways was supposed to be the second largest contributor to the national monetization pipeline. It has not really met that goal, so to speak. Of course, it's roads that has been the largest contributor. Surprisingly enough, coal has also come up fast, but here lies in the problem. Basically, the monetization pipeline was meant to, invigorate life into those assets which have been lying idle, and not to kind of just talk about assets which are already running, and that's what is happening. So probably all the dead weight will be shaken off at some point in time. Maybe we can see some announcements coming up in the budget, so to speak. Last year, we do know that the monetization aim was met. It was somewhere around 88,000 crores. I think the government exceeded that. This year, the aim is around 1.62 lakh crore. We are given to understand anywhere between 1.25 to 1.50 lakh crore would be coming in. But again, the question remains, how much of that will come to the centre? So all of this is going to form part of the larger realignment that we are talking about, and some announcements likely in the budget.
All right, Sapna, thanks very much. So some reassessment, relook is going to happen, is what Sapna is telling us. Thank you very much for that. Well, how should you position yourself in the last hour of trade? Mitesh is with us with exactly that. Mitesh, good afternoon. 170 down now. So this is turning out to be a deeper cut, 18,134. What would you do, Mitesh?
In fact, we've been calling for some kind of a deeper cut, for the last couple of days. The hourly and the 2-hourly indicators had turned down. So looking at 18,100 and then possibly 17,980, 18,000 zone as the key support area. I think this choppy volatile range bound market might be the trend for the next couple of days. So trading with clearly stock specific biases. I have a sell on TCS. That's the stock which has broken down a bit. Keep a stop at around levels of 3,310 and a target of around 3,230 on the downside could happen. While IOC is something which is breaking on the upside. There's a buy with a stop below levels of 68.5 and look for targets for around 74.
Okay, all right. Thanks a lot for that, Mitesh. Well, there's one clutch of stocks that are doing well because the box offices, well, they're ringing in the big mullah. Drishyam 2 did pretty well and a couple of other releases as well. Vaishta joins us to run us through a quick analysis on that. Vaishta, over to you.
Hi Nigel, thanks for that. Well, the multiplex stocks have been doing quite well today. This is because, as you mentioned, Drishyam 2, a legacy movie, was released over the last weekend and has been successfully clocked 64 crores in its opening weekend, which brings a likelihood of it being able to cross 100 crores at least in the next 2 weeks. Hopes now are pinned for a better Q3 of FY23, which is after the Hindi box office collections, which was slow in Q2 of FY23. The lifetime collections for movies that were released in Q3 till date are at approximately 450 crores, which is to be compared with 812 crores which were clocked in the previous quarter. And we are not going with a year-on-year comparison as there were COVID-led restrictions on the theatrical business. Now, there is a decent pipeline for movies which are expected to be released in the latter part of Q3. Which includes Varun Dhawan, Star Wars, Bhedia, there's Circus, there's Avatar, there's a South Indian movie also which is Kushi. So there are such movie lineups which bring some hope for the Hindi movie industry to move out of the turbulent times after a string of failures in the recent times. Back to you.
Thank you very much for that. The street is excited about the potential of movies like Drishyam as well as Avatar. Hemang Jani of Motilal Oswal Financial Services now joins in. Hemang, it looks like Drishyam 2 is a massive success, at least going by the weekend collections. Do you think this could reinvigorate, multiplex stocks which have been under pressure ever since they came out with their Q2 numbers?
Good afternoon, Rima. I think for the multiplex stocks, Drishyam 2 and its response and collection has definitely been a a big positive trigger, along with Kantara, which has got a very strong collection both in India and globally, and this Black Panther. So on a lower base, there is a sense that maybe this year the multiplex companies can see a very strong growth, and we have also seen a fair bit of consolidation with both two major players deciding to merge. So I think it might provide some sort of a relief rally for the names like PVR. But on an overall basis, given the kind of disruption that we have seen, it would not be, kind of right to, go with this entire flow and chase the momentum. So at best, it could be a small tactical trading opportunity for traders.
Tactical trading opportunity. By the way, Rima, have you seen Drishyam yet?
The first one, yes. Not the second one, no.
In Malayalam or in Hindi?
I've seen the one in Malayalam. I'm waiting to see the Hindi one as well. But the Malayalam one is very good. But I heard it's a little different now, the Hindi one. There are some twists.
Not sure. I've seen the original. There's such a heated debate, right? I mean, movie buffs who've seen both, which is better. But yeah, I mean, the original absolute classic. 160 points lower. 18,146 is where we are at. Hemang, hi. From just feedback from people you speak to, market intermediaries, dealers, sort of retail investors. Is there a little bit of nervousness creeping in, some cautiousness creeping in? What are you telling your clients to do?
Yes, Prashant. In fact, when we see the large cap versus mid cap performance in the last 3 months, 6 months, it's clearly telling you that the retail is not so gung-ho in the market, and at portfolio level, the performances have not been that great. I think the larger focus is on the option side, where by and large, because of the lower IVs and lower premiums, people are kind of making money on various strategies that they are following. But there's a sense that when the index is at a high level, if the portfolio is not performing, it's not a good sign. So people are slightly more cautious at this point.
Okay, all right. Hemang, what about these Ferris names? All of them ran up in anticipation that there's going to be some relief. The relief has come about. The problem is on pricing as well as demand. It's a little bit, sluggish domestically and internationally as well. What do you do with the Ferris names in particular?
So, Nigel, we do like this space for the reason that after a long time we have a status quo being maintained, and names like NMDC and JSPL, and even the second manufacturers like Shyam Metallics or the pellet exporters like Godavari Power, they will stand to benefit. But what we must reckon is that for steel companies, there is going to be a corresponding increase in the input cost. So at margin level, there may not be any significant improvement, and that is what is reflected in the price also. As you can see that Tata Steel, SAIL, etc. have actually come off from the high level at which they had opened. So I think NMDC and JSPL are the names where we are positive on.
All right, Hemang, stay with us. We want to put the spotlight on IEX as well, as its board is set to meet later this week to consider a share buyback. Vivek is here to tell us more. Stocks up about 4-5%. Vivek, take it away.
Well, that's right. So IEX, after a very long period of underperformance today, is buzzing quite strongly in the session. The news is that the board will be considering a buyback of shares, and this is on November 25th. The total cash that the company has on the books is close to 1,000 crore, with the estimated free cash to be in the range of close to 500 crore. Now, if you're talking about IEX itself and how the stock has performed, it's been quite a bit of an underperformer lately. In the last year, it's down almost 44%, and the stock is just marginally off, the 52-week low of close to 134. Now, what's actually happened as far as IEX is concerned, the reason for the underperformance has actually been the fact that the company's, almost near monopoly status has now been threatened. There are two new power exchanges, so that has clearly had an impact as far as the significant premium valuation multiples that the company was enjoying earlier, and also the management commentary in terms of expecting near-term trading volume softness on the back of the fact that there is now a price cap as far as power prices are concerned on the short-term exchange is also something that has impacted IEX's interest as far as market participants are concerned. However, going forward, the management has indicated there are a couple of key triggers. The first one, of course, is the introduction of long-duration contracts in IEX itself, so that's a big market, and also the operational efficiencies of the Indian gas exchange, in which company has a significant stake, is also seen to be a key trigger going forward for IEX.
Okay, all right, Vivek, thanks a lot for that. Hemang, what do you make of this one? IEX, I recall the stock at more than 300 rupees. It's half from there. But also, if you look at it, from the earlier, 3 years or so ago, the stock went up one way, now it's falling one way. At around 140 rupees odd, the management is saying we're going to put in some money, we'll buy back some stock. There are some triggers as well going ahead. What would you do with it?
So Nigel, we used to like this story, and we had participated in the initial up move that was there when the entire platform companies and the re-rating that happened. But I think the stock moved ahead of the times, and we have also seen a very significant correction. And we just should wait for the extent of the buyback and the price at which they will be doing it. But we do like this space. So at some point, basis the actual performance over the next couple of quarters, we may want to reinitiate the coverage there. But at this point, we are avoiding this name.
Hemang, what about Zomato? Two sets of news over here. One, that co-founder Mohit Gupta has stepped down, making it the third high-profile exit in the last 1 month. And two, reports indicate that the company is looking to axe about 3% of its workforce. Do you think, how much of a negative is this for the stock? Because one could also look at it in the fact that, cutting down and cost optimization will help the company on its path to profitability, which is something that the investors are gunning from Zomato. So how should we read this development from a medium-term point of view?
So Rima, I think the high-profile exit in any startup and platform company is not a new phenomenon. I don't think the market is going to get perturbed by that. And when we compare Zomato with some of the other new age IT companies, be it Paytm or Policy Bazaar, Zomato relatively in terms of performance and the potential is better placed. Also, a large part of the selling which was there has also got absorbed, and post that the stock has seen a decent amount of uptick. So we think that it is relatively better placed, though we would not be very comfortable taking a longer term view. But given the quarterly performances on many operating parameters, we think that this provides a good opportunity for retail traders who are looking for a 10-15% kind of a move. So this is definitely a preferred one.
Okay, all right. Stay with us, Hemang. For the time being, though, we'll have to slip into a short break. On the other side, we'll be joined by Alpha Manager of the Day, Aman Chawan of Abacus Asset Management. Will be joining in to discuss his views on markets as well as how his portfolio is shaping up. Stay with us.
Welcome back. Markets down for the third day in a row. The Nifty is hovering around 18,150. The mid-caps are performing relatively better today. The mid-cap index is flat, but remember, last week it underperformed the benchmark indices by nearly 1%. So there is that bit of a reversal that we are seeing today. China, remember, reported its first COVID death in more than 6 months, and that has dampened hopes about a possible reopening anytime soon. And that's one of the reasons why markets in China as well as Hong Kong were a bit subdued. And that's part of the reason why Indian markets too have been a bit suppressed. But let's talk about the new listings, the new kids on the block in Dalal Street. 5-star Business Finance and Archean Chemicals, both of them listed on the bourses. Let's first talk about Archean Chemicals. It saw a very good listing. The stock is still holding up with all its gains, up 12%. Sonal is here with the details. Sonal?
12% higher on Archean Chemicals, and it was expected because it was a strong subscription that this particular IPO saw across categories. As you said, it has been a strong listing, 12% higher on the stock right now, and at these levels, the stock trades at around 30 times FY22 EPS, that is the trailing EPS, and it is trading at a level which is much lower than its peers, something like an SRF or Vinati Organics, which trades between 50 to 60 times FY22 earnings. In terms of what these funds raised will be used for, it will be used for redemption of their NCDs amounting to around 800 crore rupees and general corporate purposes as well. The company is a specialty chemicals manufacturer. It manufactures marine chemicals and also produces some of these bulk chemicals like bromine, industrial salt, sulfate of potash as well. And specialty fertilizers are also produced by the company, which is used for chlorine-sensitive crops and also for medical uses. Now, the company has good exposure to export markets. There are markets like China, Japan, South Korea, Qatar, Belgium, and the Netherlands as well. And they have a sizable exposure to the Chinese market. market. So they get total revenues, out of which 36.5% come in from China. Domestic exposure is around 32%. Rest of Asia at 17.3%. There's Japan at 6.3% and South Korea at 11%. Going through their performance, their margins have been continuously increasing from levels of 25.7% in FY20. They have been able to inch them up to 42% in FY22. First half of FY23, they are standing at margins of 40.8%. From being a loss-making company in FY20, they have seen profits growing to levels of 188 crores in FY22. The risk really rises from the fact, and they have written it in their DRHP as well, that there's a lot of pricing pressure in this particular industry that this company functions in. They say pricing pressure from foreign companies to make similar product at cheaper prices is a big risk that they're facing. But other than that, revenues and profits seem to be growing for the company.
Okay, that's interesting. Thanks very much, Sonal, for that. You know, the other one is 5-Star Business, which listed today. It's had an interesting sort of life on the bourses so far. It opened 5% lower, actually opened 2%, then was down 5%. And from there, it made a dramatic recovery, was up 12% at the day's high. Those gains have been cut in half, but still 5% higher on top of the issue price. Surabhi is here to tell us more in terms of how this one is looking on its own, and of course, relative to other already listed entities. Surabhi, over to you.
5-Star Business saw a muted listing on the stock exchanges today, but since then it has recovered quite sharply. It opened at a 5% discount to its issue price of 474 rupees. The initial size of the IPO was 1960 crores, which was later reduced to 1588 crores due to weak demand. The company provides secure business loans to micro entrepreneurs and self-employed individuals. Now, key reasons why the stock was expected to list at a discount was: 1. The IPO was entirely an offer for sale, that means no benefit to the shareholders. 2. It was undersubscribed. It was subscribed only at 0.7 times. And 3. They operate in a highly competitive space and the valuations were quite high. The stock was listed at 3.6 times Q1 FY23 book value, which is higher than some of the other listed peers. The management is very confident about their growth outlook, which is why the stock has recovered from their lows. The management was on our channel earlier today, so let's listen into what they had to say.
On the guidance, we are targeting a market space of 20 trillion market opportunity in our country. We are just around 6,000 crores of AUM. It's a long way for 5-Star to go. Pre-COVID, we were growing at close to 90-95%, one of the fastest growing NBFC in our country. And COVID, we took a very conservative call to grow at 15%. Now the growth is back in 5-Star. From last 3 quarters onwards, if you see, we are all beating the pre-COVID level. You'll be very clearly seeing a very good growth for 5-Star to come in years and especially in this next 2 quarters of December and March.
All right, Hemang, what about you? What do you think about these 2 new kids on the block? Both of them are showing some potential, at least going by the screen. What's your take?
So, Nigel, 5-Star Business, because this company is into financing the smaller businesses, we would definitely avoid, because our sense is that in the current scenario, it makes more sense to be with the structure of a bank or a larger NBFC, and this microfinance company is the company which is into smaller businesses funding. I think it doesn't really make sense because of the high risk of asset quality and the balance sheet scale up, etc. So avoiding that. Within the chemical space, we do have a positive view. In fact, we have come out with a very detailed report. But our take is that the existing listed companies like Vinati or Nosil, they are much better placed compared to the newer kids, because it's not that simple a story where you have a China plus one or a Europe plus one, but the sourcing of natural gas and many other dynamics are involved. So from that perspective, we prefer the listed ones.
All right, Hemang, we'll leave it there. Thank you very much. Appreciate you joining in with that perspective. Thanks indeed. Aman Chauhan is now joining us. He's a fund manager at Abacus Asset Management. Aman, good to have you with us here. Thank you very much. Before we get down to specific stocks and your holdings, etc., just a quick comment on earnings for Q2. The point is banks did okay, autos did okay, but commodities largely, etc., there was disappointment as expected. But we're not seeing any earnings upgrades, even in banks actually even in autos, right? Earnings are there for those two sectors, but not getting upgraded, right? At the end of the day, that is what matters for markets. If the earnings cycle is picking up in a way which is better than expected. What's your sense? What was your reading?
Yeah, it's a right observation that earnings upgrades have not happened. I think the biggest reason for that is the world is too volatile and there are too many moving pieces. So if you're exporting, and if you're exporting to Europe, you are significantly impacted. If you're exporting to US, you are mildly impacted. Within Europe also, if it is UK, then you are slightly better off than Germany. In case your product is a import substitute, then you are better off. And too many moving pieces. And similarly is the case with China. If you're importing raw materials from China, you got impacted when the prices are high. Now freight rates are down, prices are down. So now you're benefiting out of it and margins are improving. So it's all over the place. And that is the reason I believe the analyst community and even the investment community has not got full grip as to where the numbers are headed. And because of this, I will say mean reversion. So whichever sectors which got impacted due to COVID are now recovering, and vice versa, sectors like IT, which did very well because of COVID, are now normalizing back to the old margin. So it's a simple theory of mean reversion, which is impacting overall earnings and the earnings visibility as we speak.
Aman, afternoon. This is Rima here. I just want to talk about one of your stocks, Route Mobile. Now, this is a CPaaS company. Its numbers have been very strong. In fact, the company for the last 2 quarters has gone ahead and upped its revenue guidance, and they are expecting close to a 60% top-line growth in FY23. That said, despite the company upping the guidance, the stock has been declining over the last 3 months. In fact, 3 months ago, the stock price was close to 1,600 rupees for Route Mobile, and now it's down to 1,300 rupees. Could you explain what the market is thinking about Route Mobile and what is the investment approach from here on?
Sure. So, Rima, while we don't comment specifically on stocks, broadly I can tell you that the biggest factor impacting stock price performance is the Nasdaq. If you see the stock performance there, it's close to 52-week low. All the platform companies are anywhere down from 50 to 70% from the recent hikes. And a rub effect of that has happened globally, including India. So the companies which were trading at a multiple, which were closer to what the peer group in Nasdaq were, they all have got impacted in spite of reporting good numbers. So it's more of a P compression which has happened in these companies than fundamentally anything changing on the earnings front.
Hi, Aman. Good day to get you in. Some of these contra calls that you took on ferrous and stainless steel in particular, that seems to be working out. What do you make of these measures that have been taken by the government of India? You have more exposure, I think, to stainless steel. But for the steel side of things, volumes could improve, but it will come at the cost of margins. Your take?
Sure. So our exposure on ferrous was predominantly on the valuation front, where the cash flows have been so significantly positive over the last few years that most of these companies were able to reduce the debt substantially. So even if at lower steel prices, the net earnings impact was quite positive. There was a time, last few months, where steel stocks didn't do well because of the government restrictions. But now that coming off over the weekend, it's back to normal business for most of these companies. And the sentiment which got impacted a few months back is now reversing. So it was not a contra call for us. It was more of being patient that when things are down, when there's a bit of uncertainty, but if you're convinced that the company is on the right path, just hold on to it till the news flow changes, which happened over the weekend. And now, hopefully, we are looking forward to better times.
Another one which is one of the top holdings is HCL Tech, and I just wanted your thoughts, Aman, on whether you think there is more pain, or is this a position that you're willing to sort of buy into as prices fall, or you think the worst is behind mostly now?
So HCL Tech is a decent combination for us. It's a good value as well as growth stock. There was an interim time when they had the big, large product acquisition, and which dragged overall margins as well as the growth profile for the company. Now, most of that is in the base. So from here on, the growth rate for HCL Tech should also track the larger peer group. And once that happens, the 30-35% valuation discount that we have versus the larger peer should narrow. So that's the narrative we have on HCL Tech, a decent risk reward. low risk and a decent reward option for us versus the peer group that we have in the IT space.
In the large cap private sector banking space, there has been a shift away from ICICI Bank, which has already performed exceedingly well and outperformed its peers, to other banks like HDFC Bank, marquee banks, but there is a little bit more in terms of a relative headroom given the way HDFC Bank has underperformed over the last 3 years. Would you subscribe to that view? Because ICICI Bank is one of your top holdings.
It's been one of the best performing stocks, and people are started to look beyond ICICI, which is now a consensus trade, and look at relative valuations. So the number 3 player or the number 4 player is almost 20-25% discount to ICICI, and that makes it interesting. Specific to HDFC, it's been almost 2 years, but the stock has been zero return with the overall merger hangover now behind us. I think over the next 3 to 6 months, HDFC will be interesting to look at because of this time correction, the 3 to 4 times book, which was the valuation premium HDFC had, has now come off, and it's just a matter of time when it will start trading again at a premium once the base effect wanes off and the growth picks up.
You know, Aman, what are you all doing with a couple of these companies that have exposure to Europe? Namely, one of them could be a CRISIL. Things are in a tizzy out there. They're sounding a little bit cautious as well. That's been a big wealth creator. On stocks like these, if you'll get a dip, you'll be looking to add more because these troubled times are not going to last forever.
Exactly, we have a similar view that in the near term, the demand has got impacted because the consumption spend in Europe has taken a severe beating. When it will happen, we don't know whether it is 1 month, 2 months, 3 months or 6 months, or it could be even longer. And that is the reason we are very closely monitoring this segment. All the companies which have a Europe exposure which has got impacted, we would like to see first signs of green shoots before committing fresh capital. So we are holding on to what we have, but just waiting for the first confirmation. We don't want to be too early that we buy in and there is no recovery and things start to look up maybe after a year or so. So we will closely monitoring it. As soon as we see some positive news coming in, we would like to act near to that.
Okay. Anything you would like to, anything you're sort of doing currently in this, I shouldn't say fall because it's barely been although in broader markets, Aman, a lot of stuff has come off quite sharply, right? Footwear companies, campus, activewear, etc. I think you owned something in that space, which is fallen sharply. Anything you're doing or looking to do with what's happening?
Frankly, not really. So we are not into the high-end consumer stocks or the 70-80p stocks that most of these companies trade at. At the same time, we are not very active in the IPO market, so we are never present in Paytm, Nykaa, and so forth. So this is where bulk of the correction has happened. We are not invested into these sectors, not just because of valuation, but this is something we feel is more suited for a PE investor kind of a mindset, which has a 5 to 10 year horizon. Running a capital market, public market fund, we feel it is better to stay away from most of these names, though some of the names are getting interesting, but so far no investments into them yet.
Aman, we'll leave it to that. Thank you very much for joining in. Escorts, by the way, is turning out to be one of the big winners of the day. It's up 8.5%. Remember, they held an investor meet last week on Friday where the company has given a 5-year roadmap. And in 5 years, that's FY28, they expect margins to hit mid-teens versus the current 10.8%. And they also expect revenues to go up by 2.5 times. So it's a long-term plan, a 5-year roadmap. But the street is quite excited by the direction and the strategy laid out by the company. Up nearly 8.5%. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment, D-Street Chatter. Stay tuned.
From 150 points. The saving grace, though, is that the mid-cap index is more or less flattish as we speak. But it's a good time to get a check into what's going on in dealing rooms. Nimesh joins us. Nimesh, tell us, what are you picking up? It appears things, they're cooling off in the last few days. We are seeing some bit of selling pressure. The broader markets are underperforming as well.
That's right, Nigel. And we've been saying this, that for the last few days, there are signs of profit booking in the broader market. So that's playing out in some of the mid caps and small caps. The participation has lowered to a larger extent from the large institutions. So that's been the case for the last many days, and that's been the case today as well. In fact, while the Nifty is down 150 points, there are no specific reasons or triggers for the markets to fall so much. I guess the volumes are on the lower side. So I was just last when I checked, compared to Friday's volumes, on both the exchanges, the cash volumes are lower by at least 25 to 30%. So that shows that there is lack of participation from the larger institutions, and that's why you're seeing very weird moves there. Having said that, still there is a lot of stock specific action which is going on, even in the broader markets. Within the financials is the PSU bank, which is attracting a lot of buying interest. So that momentum continues. So a lot of PSU bank stocks, smaller bank stocks are doing good even in today's trade. I guess technically 18,300 seems to be a very strong resistance you've been pointing out of late as well. So that's a level to watch on the upside. But having said that, it's been a trading range for the last many days. The volumes are on the lower side, as I said earlier, and there is lack of participation as well. So that's playing out. I guess it's a no trade zone, so to speak, for the traders as well. They really don't know which way the markets are headed. So that also explains the lack of volumes as well. The other interesting point is, not many would have highlighted this. Friday there was a problem with CDSL and they had a technical issue, so a lot of trades didn't go through from the CDSL end. Today I'm told that there is a problem with NSGL as well. While the CDSL issue is resolved over the weekend, today there is a fresh issue with NSGL and they are not able to confirm the trades as well. So I guess that is also playing out in terms of volumes in today's trade. But I guess overall it's lack of participation both from the large institutions as well as the fact that even the traders are not finding any directional moves, and hence a lack of participation from them as well in the last few days.
Okay, all right. But Ramesh, you briefly said that there's a lot of action in individual stocks, right?
That's right.
So tell us, what all are you picking up with regard to these individual stocks?
Sure. So in terms of individual names, the first stock is Delivery. This has been a trend for the last many days now. Every now and then when the lockup opens up, you see a large trade. Today there was a 2.5% stake changing hands in Delivery, and I understand a leading private equity investor was seller in today's block. So the disclosures will be important as far as Delivery is concerned. So that's the first one. The second stock is HDFC Life. After a long time, I'm told that there is a bit of interest back in this particular stock. So first signs of some bit of buying back from larger institutions, and some of the leading FIs seems to be a buyer in HDFC Life today. So that's the second one. The third stock is Apollo Tyres. Even that stock is buzzing into it purely on back of buy flows at a leading FI desk. And remember, the tire companies do benefit from falling crude prices, so that's helping at the margin as well to Apollo Tyres. The last stock is BEL. Looks like there is profit booking across the board in the defense stocks. You saw what happened to Mazgaon as well in the last few days, and BEL stands out today on the negative side purely on back of sell flow. So not only the retail investors, but even at an institutional level, looks like there is some bit of profit booking in BEL, and that's the reason why that stock is under pressure today.
Okay. All right, thanks very much, Nimesh, for that. So interesting list as always, and we'll keep track. And of course, I mean that first CDSL issue, now the NSDL trade confirmation being an issue. I mean that certainly would weigh at the margin. 18,165, 140 points lower. Mitesh is back with us to tell us what to buy or sell today for a reverse one tomorrow. Mitesh, over to you.
Prashant, BPCL is reversing. We had a buy call on IOC earlier. I think BPCL can be a BTST as well. Keep a stop at about 308.5 and a target around 315 for tomorrow is what I will look at. And on the negative side is Bosch Limited, that's STBT. Keep a stop here at just about levels of 16,430 and a target of around 16,280 or 16,275 would be tested.
Okay, thank you very much for that. By the way, fertilizer stocks are moving up as we speak. RCF, Madras Fert, FACT, Bangalore Fertilizer. Pull up the intraday chart of these fertilizer names and you would see buying coming through in the last 10 minutes or so. And Cyient is another one. Remember, it also held its investor day on Friday. The stock was subdued throughout the trading session, but now in the last half an hour or so, there has been some interest coming through, not in cyber tech, Cyient, the mid-cap IT company, where the company has said that they are aiming for $1 billion in terms of revenues by the second half of FY24. But let's talk more about the markets as well as individual names. Sudeep Bandopadhyay, the group chairman of IndiTrade, is now with us on the show. Sudeep, thank you very much for joining in. All eyes are on these mid-cap PSU banks. Every single day you can see the stocks moving up. There is talk that we've seen one leg of re-rating, but there is more which lies ahead. There are more legs to this PSU rally. Any mid-cap banking stock on the PSU side which you would recommend to buy right now at the current levels?
Good afternoon, Rima. I think you're absolutely right. There are a lot of excitement in the PSU banking space. This was on the cards, and we have been for some time recommending buy in PSU banks. The rationale was for all of us very clear to see. The BFSI is definitely expected to do very well, and the results coming out from the most of the banks and other financial services companies have been pretty good in Q2. I think that trend will continue for the next couple of quarters at least. And considering the valuation at which PSU banks were quoting, there were definitely, the valuation gap, and this valuation gap is being filled up by a lot of buying coming in most of the PSU banking stocks. SBI was always talked about, but the other PSU banks were really quoting at a significantly lower valuation. Now, at this stage, I think Bank of Baroda, Canara Bank, we have seen kind of rallies, and they have moved up quite a bit. One banking stock which hasn't, PSU Bank, which hasn't really come up with good set of numbers and still lagging the other large PSU banks has been Punjab National Bank. I think if somebody is a little aggressive investor, I would recommend go and buy PNB. Yes, there has been challenges with this bank continuously over the last few years. Last quarter also, Q2 was nothing great, but I think they will turn the tide, and whether it's Q3 or Q4, they will come back with a decent set of numbers, which probably will beat all of us, our expectations. So if an aggressive investor is still willing to put money in the banking space, PNB is what I will recommend.
Okay, all right. By the way, we have some bit of a pullback from the lows of the day. So to highlight a few stock, IndusInd Bank has pulled back from the day's low. Let's get the intraday chart out there. Cipla, that's been one of the stronger pharma names actually. That stock has moved higher as we speak. And Coal India as well from the day's low. Well, that's pulled back a little bit. Sudeep, I wanted to ask you about Coal India. Things are looking up. Coal prices stay elevated. Valuation wise, even after such a big run up, depending on how you want to justify it, but it doesn't look very expensive. What's your take on it? The problem is that the government of India could come at some point of time and sell some paper, which is overhang. Your sense at 230?
You're absolutely right, Nigel. I think, we were writing off these traditional energy companies a bit too soon. The way things are, before the green energy takes over, there is still probably a time of about 30 to 50 years. And that's a very long runway for these companies. Coal India, as we know that the biggest challenge was the operational challenges. They don't have dearth of reserves. They don't have dearth of capital or the fundraising ability. The challenge was operational efficiency. If they get that act right, I think there is significant potential for Coal India to move up from here on as well. Now, yes, your point is valid. Some action or inaction by government, which is the largest shareholder, can derail this valuation catch-up, and we have to be cognizant of that. But having said that, the way the world is energy hungry now, the way we are looking at energy and energy security at this stage, including India, I think Coal India has a good runway going ahead. So yes, Coal India, even at current 30 levels, can be bought for, let's say, 1 year plus hold.
230 on Coal India. By the way, Coal India, I put that piece out on earnings after second quarter, and I was looking at earnings expectations and how they've moved for most companies. Coal India ranks as one of the companies which has seen the maximum upgrades in earnings. This is FY23 estimates over the last 2 or 3 quarters. Do you track Deepak Fertilizers, Sudeep? Any thoughts? Up about 8% or so. The news is this deal with Aarti Chemicals. Deepak will provide, this is a 20-year agreement where Deepak will provide nitric acid to Aarti. So they just formalized, an arrangement which was in existence in any case for the last decade and a half. Any thoughts?
Well, I think, Prashant, it's a good development. This arrangement getting formalized is good. They have a secure outlet for one of their products. But, as you rightly said, this arrangement was already there. So leave aside that. Overall, specialty chemicals have been an interesting space. We have seen a lot of excitement. But in the past few months, there has been sharp correction as well. And post-correction, Deepak was looking attractive. And I maintain my view that some of these specialty chemicals correction has been unwarranted. So both Aarti and Deepak Nitrite has been our favorite stocks in the recent past, and at current levels both can be beat.
Okay, that's on Deepak Fert as well as and Aarti Industries on that 8,000 crore contract that the two signed. Bharti Airtel has moved up. It's up close to about 1.7%. Last week, the company raised the entry-level prepaid pricing from 99 rupees per month to about 155 rupees per month in two circles, Haryana as well as Orissa. It doesn't constitute much in terms of, subscribers. It's less than 5% of its overall subscriber base, but the market is seeing it as a precursor to a possible tariff hike. Perhaps the company is just testing waters in two circles, and then later on they will extend it to the rest of, the circles as well. And that's a reading from the market point of view, which is why the stock is up 1.6%. Here's what we'll do. We'll slip into a very short break. We'll come back and continue our conversation with Sudeep, so stay tuned. Welcome back. Important business commentary. Shireen Bhan is in conversation with the Steel and Aviation Minister Jyotiraditya Scindia. Listen in.
Can you hear me, Shireen? Can you hear me?
Mrs. Scindia, can you hear us?
Yeah. So we were in the month of July in the monsoon season, which is the most lull period for demand for the steel sector, understandably, because construction and everything else comes to a halt. And therefore, through that period of iterations and deliberations, we took a conscious decision with all hands on deck. The steel industry, government, whether it's the steel ministry or the coal ministry, the finance ministry, that we would watch how the steel prices react when demand starts taking off in the festive season. And once we have some sort of confidence level that steel prices are not again going to go on a northward trend, then we will certainly evaluate this. That's point number one. Point number two, we were also tracking raw material prices, because as you're aware, iron ore and coking coal form almost about 60 to 70% of the production cost for the steel majors as well as for the secondary steel sector. And those commodity prices, after reaching a peak, had started falling tremendously. And we were apprehensive that maybe those prices also, as international forecasters had put in place, may start rising again. So there would be multiple pressures on the steel industry with regard to pricing. And so we were dynamically monitoring that. And I had committed to the steel industry that we will take a view one way or the other in the month of November. And in the month of November, through our multiple deliberations with the Coal and Mines Ministry, with the Home Ministry, with the Commerce and Industry Ministry, and finally with the Finance Ministry, we took that view that the time has come now that we need to remove this export duty. Both, let me emphasize, with regard to steel industry and the steel sector with respect to the 9 HSN codes, but also in terms of the raw materials, which is iron ore greater than Fe content of 58, less than Fe content of 58, as well as pellets. So the move has been across the board, vertical integration from raw material to finished product, where in the case of iron ore, it has been removed completely in the area of less than 58. Greater than 58, right. It's been reduced from 50% to 30%. Pellets have been removed completely. And the 9 HSN codes for steel products, the 15% export duty has been removed completely.
Yeah, you talked about how there have been deliberations on interministerial deliberations as well as deliberations with industry, and finally the government deciding to take this call in the month of November. Mr. Scindia, I want to understand from you, in your conversations with industry, what is the feedback in terms of inventory build-up, inventory pile-up, and now destocking on account of the export duties being reversed? What is it that industry has left on your table by way of feedback? Because it's also a globally challenging environment that the steel industry is currently faced with. If I were to take a look at the numbers, Nomura's. Nomura has put out a report on how exports are down 66% between April 22 to about October 22, and in fact at the lowest monthly level of exports since May of 2016. So it is a challenging environment. What did industry place on your table by way of feedback?
So if you look at the international environment, in which I include India, at this point of time, the commodity cycle peaked about 2.5 months ago. And since then, whether it's coking coal or iron ore, prices have fallen off with regard to raw materials ranging between 30% to almost 55% in terms of value. Coking coal has come off from $600 to almost $300. So raw material prices have come off exponentially. On the other hand, steel pricing is governed by two factors. One is the raw material input costs into steel making, and the second is based on demand pull and therefore impacting supply push. Now, internationally, demand pull has contracted tremendously for multifarious reasons, which you must have elaborated many times during your show for all commodities worldwide. The fact that many economies are quote-unquote near recessionary trends, the fact that infrastructure spend in many international economies has actually fallen, the fact that China has also not been able to ramp up demand. But conversely, the situation is very different in India. If anything has kept the steel sector going as far as India is concerned, with a capacity of almost 150 million tons per annum and a production of almost 121 million tons per annum, it's actually the domestic demand driven by Prime Minister's huge push on infrastructure. The fact that public spending on infrastructure is close to about 10 lakh crores this year. The fact that there is a very robust demand cycle, which after decades has hit almost about 10.6% in terms of increase in demand for steel. And therefore, the domestic demand, what is shoring up steel industry to a great extent. As far as the export market is...
All right, I mean, that's a conversation with the minister. We'll sort of go back to that. But let me just quickly wrap up things here, because we are approaching just 3 minutes away from the close. 145 points, 150 points lower on the Nifty, 18,159. So the market did break through Friday's lows, and I think the next level is the 20-day, which comes in at about 18,070 or so. Banks perhaps did a little better, largely led by PSU banks, because, I mean, a lot of PSU names, I mean, UCO Bank, Central Bank, IOB, 10, 12% kind of gains, and the index itself was up 1.5%. The large pressure came from IT names, IT index losing the most. Real estate as a pack was down. Energy was under pressure. ONGC, of course, a case in point. I mean, you don't look at large caps. ONGC, of course, as I said, the big loser. Adani Ports was down. Hindalco was down sharply. TCS, HDFC and Hero MotoCorp are the few other losers. There were gainers, but only 3 with gains of more than 1%. BPCL, Bharti and Axis Bank. So that's large caps for you. Broader markets, Rima.
Well, the mid-cap index goes home absolutely flat, so relative outperformance. In terms of big movers, Easy Trip locked in an upper circuit of 20% ahead of its board meeting to consider a bonus. IEX also higher. Their board will be considering a buyback. Mid-cap banks, as Prashant highlighted, UCO Bank was locked in an upper circuit of 20%, and it's a 15% gain for Bank of Maharashtra. Godavari Power and Ispat was up close to about 14% after now that the company is allowed to go ahead and export. Fertilizer made an up move towards the end of trade, and in that, Deepak Fertilizer up 8% after it signed that near 8,000 crore agreement with Aarti Industry. On the losing side, one more stock, Escorts up 7.5%. Very strong guidance given by the management, and the two listings, 5-star as well as Archean Chemicals, go home with pretty solid gains on day one. On the losing side, weakness seen in new age companies. Delivery, there was a large block deal of 2.5% today. The stock down 2%. Nykaa sold off in the last 10 minutes of trade, lower by close to about 4.5%. Nigel?
Well, that's right. That's sort of a day when we ended lower. The mid-cap index to goes home more or less as flat as can be. A couple of stocks poked up though in the final hour. You had Metropolis that managed to eke out some gains from being down. Ramco Cements as well ended at the high point of the day. But all in all, well, it was pretty much a sluggish trading session that we did see in today's trade. Well, on that note though, we'll have to wrap up on this edition of Closing Bell, but you don't go anywhere. On the other side, CNBC-TV18 pays tribute to India's big bull, Rakesh Jhunjhunwala. The first part of Remembering Rakesh series comes up next, where Ramesh Samani is in conversation with Mr. Jhunjhunwala's friends who discuss his stock market journey. Stay tuned for Wizards on the Street.